If you're waiting on the perfect market to buy a home here in Houston, Texas, I've got news for you. That perfect moment doesn't exist because while you're waiting for prices to drop or rates to fall, the market and your life keeps on moving forward. So today I'm going to be breaking down why timing the market is one of the biggest myths in real estate and how you can make the right move for you right now based on facts and not on fear. So stay tuned because by the time we get to the end of this video, you'll know exactly what to focus on if you're ready to stop renting and start building equity. I'm Sabriyah Callis, your partner in finding and funding your new home. I help renters and first-time home buyers turn the dream of home ownership into reality. So if you're new here, welcome. Make sure to hit that subscribe and tap that bell because every week I share real-world home ownership tips, Houston market insights, and inspiration to help you dream it, affirm it, and own it. Let's start with the phrase that I hear all the time: I'm just waiting for the market to cool down. Listen, here's the truth: there's no such thing as the perfect market. In real estate, the market is constantly shifting. Prices, interest rates, inventory, they all move in cycles. So even a professional economist can't predict the market bottom with consistent see and accuracy. And here's something most people don't realize: the only perfect market is the one that works for you. So let me give you an example. Last year, when interest rates were around 7%, some buyers backed out, waiting for rates to drop to 5%. But while they waited, home prices in Houston, they went up another 5 to 8%. So now, even if rates come down, the home they wanted costs $25,000 more. And the property taxes, guess what? They increased too. So that's why focusing on timing the market instead of understanding it can cost you more in the long run. I share with you guys that we're going to deal with facts, not fear. The reality is it's not about market timing, it's about life timing. Ask yourself, do you have a stable job? Are you ready to invest in your future instead of paying rent? Are you tired of waiting for permission from a headline to start living your dream? If you answered yes to any of those, then the best time to buy might be now, not someday. Because while you're waiting, guess what? You're still paying someone else's mortgage. Let's say you're renting for $2,000 a month. That's $24,000 a year going toward your landlord's wealth, not yours. Now, imagine putting that same money into your own home. Just 5 years, you can build tens of thousands in equity, even in a so called imperfect market. The second phrase that I hear constantly is, I'm waiting for interest rates to drop back down to 3%. Listen, I get it. We all remember those pandemic era rates. They were incredible. But here's what you need to understand: those rates were historically abnormal. They were an emergency response to a global pandemic. So, looking at historical data, mortgage rates averaging between 6 and 7% are actually much closer to the long term norm. Yes, they might come down somewhat, but banking on a return to 3% rates means that you could be waiting for years or it might never happen. Here's the math that really be math, and I'm talking about the math that really matters. Let's say rates do drop by a full percentage point in the next year. You can refinance. That's the beauty of mortgages, right? They're not permanent. But if you want and you wait for that year to pass and home prices in Houston increases by just 5%, which is modest given our market history, that $350,000 home is now $367,500. That's an extra $17,500 in purchase price. You can't refinance that away. That you're paying forever. And here's something most people don't consider. When rates do drop, what happens? Buyer demand surges. Suddenly, you're competing with everyone else who had the same idea to wait. More competition means bidding wars, waived contingencies, and potentially paying more for that same price. So you might get a lower rate, but you could end up paying more for the house and dealing with a much more stressful buying process. Now, let's talk about what's actually happening right here in the Houston area. Houston's population continues to grow. We're one of the fastest growing metros in the country. More people moving here means sustained demand for housing, right? Houston's real estate market has always been known for its stability and its diversity. Unlike other major US cities, Houston's home prices haven't had these wild crashes. They tend to adjust gradually. And right now, inventory is increasing slightly, which means more choices for buyers. Builders are also offering incentives, things like rate buy downs, closing cost assistance, upgrade credits, and get this, even with higher interest rates, we're still seeing steady demands because people continue to relocate here for jobs, affordability, and for lifestyle. So while everyone's waiting for that mythical crash, smart buyers are taking advantage of these opportunities and they're negotiating better deals. Let's break this down with some quick math. As you guys see, I love math, right? So you're looking at a $350,000 home in Houston right now at 7% interest rate. If you wait for rates to drop to 6%, but prices rise by just 5%, that same home will cost you 367,500. Even with the lower rate, your monthly payment difference is about 100 to $150, but you've lost $17,000 in buying power and time building equity. So yes, interest rates matter, but waiting often costs more than buying when you're ready. Here's what smart buyers in Houston are doing right now. They're getting pre approved to understand their true budget. I talk about that a lot here on this channel. They're locking in homes they love while there's less competition. They're refinancing later if rates do drop. Because remember, you can always refinance the rate, but you can't rebuy the price. And they're also leveraging down payment assistance programs and first time buyer incentives that can save thousands, especially right here in Texas. This next phrase is about to drive me nuts. The market is definitely going to crash. I should wait. Listen, y'all. I'm not going to tell you that crashes never happened. 2008 happened. But let's talk about why Houston's market fundamentals are so different today. First of all, lending standards are completely different. Banks aren't handing out no doc loans or subprime mortgages like candy anymore. Today's buyers are actually qualified, which means fewer foreclosures and less distressed sales. Secondly, Houston's economy is so much more diverse now than ever. Yes, we're still a huge energy hub here, but we also have the Texas Medical Center, the largest medical complex in the world, plus growing tech sectors, manufacturing, and aerospace. We're not a one industry town anymore. We actually learned. And then the third, inventory. We don't have a surplus of homes. We actually have inventory shortage. Crashes happen when supplies massively exceeds demand. And that's not our situation here. And here's why that really matters because even if there is a market correction, trying to time it perfectly is nearly impossible. How will you even know when the bottom is hit? Most people don't even recognize that until months or years later when they're looking at the charts in hindsight. So, meanwhile, you're spent another year or two paying rent, missing out on equity building, and dealing with the stress of timing decisions. So, you might be wondering if market timing doesn't work and waiting on interest rates to drop doesn't work, what should I be doing instead? So, focus on your personal situation and buy when it makes sense for you. Please, here are the questions that are actually going to matter. Can you afford the monthly payment? I mean, comfortably, not stretched to your absolute limit, comfortably. Do you plan to stay in the area for at least 3 to 5 years? Real estate is a medium to long term investment. And if you might move in a year, maybe renting makes more sense. Do you have a stable income and an emergency fund? Because this is crucial. You want to make sure you can handle the unexpected. Is renting or buying more cost effective in your specific situation? Run the actual numbers for your scenario. Here's the beautiful thing about Houston market, y'all. We got options at various price points, diverse neighborhoods, and a steady economy. Instead of trying to time the market perfectly, I want you to focus on finding a home that fits your budget and your lifestyle. And remember, every month that you pay rent is a month you're guaranteeing someone else's mortgage, not building your own wealth. The best time to buy is when you're financially ready and you find a home that works for you. The second best time, probably still today, rather than waiting for a perfect moment that may never come. Look, I know this goes against what your anxiety might be telling you. Buying a home is a huge decision and it's natural to want every condition to be perfect. But perfection is the enemy of progress. The data shows us that time in the market beats timing the market almost every single time. And if you're financially ready, if you found a home you love in Houston, if the numbers work for your budget, that's your signal. Not interest rate predictions, not trying to catch a falling knife, not wanting or waiting for some mythical perfect moment. Stop waiting for the perfect market. Start focusing on your perfect timing because your opportunity doesn't live in a market report. It lives in your decision to move forward. And if this video gave you some type of clarity, I want you to drive a light bulb emoji in the comments below and share this with someone who's been saying, I'm just waiting. And if you're ready to explore your next step, whether it's buying, selling, or learning more about the Houston market, be sure to click that description in the first comment below to schedule a free consultation. Remember, don't wait to buy real estate and wait. I'm Sabriyah Callis, helping you dream it, affirm it, own it, and I'll see you on the next video. Bye now.